Welcome to Silicon Valley Impact, where business insight meets startup innovation. And now, please give a warm welcome to your host, Brian Sparks!
Yes, I love it. That never gets old. Welcome.
I got a little chuckle out of you on that one, didn't I? I surprised you.
You lit up the room, Brian. Welcome to Silicon Valley Impact. I'm your host, Brian Sparks. The purpose of this show is to have honest conversations about what it takes to build great businesses and communities so that you can make an impact
in your own.
In your own. Everybody together now. All right, Brian, we've got some rock stars.
Well, hold
in
on
the
a
house.
second. You're going.
I get so excited about the people who show up.
I know. But you got some things you wanted to talk about first.
Yeah.
We want to let the listeners know. Oh, is everybody's phone off? That was mine. We want to let listeners know that this show is actually having an impact in our community.
Yeah.
Right? We're building a community here on Silicon Valley Impact, and we're getting traction with people. So let's talk a little bit about your week.
Yeah, well, with the traction, we have a co-host today, Hans. You'll be on in a second. But Brian, I'm super excited to talk about. We were down in Santa Monica with Ignite GTM. We're venture partners with them with their fund of funds, and we had an AI for retail down in Santa Monica with Supermicro and NVIDIA. AMD was down there as well. A lot of great people, so they'll be on the show coming up. We'll talk about that a little bit in the future. But I think a really exciting announcement, Brian, is I tipped my hand last week with this, but we're launching Golden Valley Angels. Yeah.
Golden Valley Angels.
Golden Valley Angels.
All right. You want to tell us a little bit more about that?
Yeah. Well, we're in the heart of the Golden State, right beyond the Golden Gate in Silicon Valley.
Oh, wow. You got a little rhyme going.
Did you see that? Yeah. I think we get AJ Thomas in here to sing that out for us. Yeah. But the Golden Valley, Silicon Valley, Golden Valley Angels, and it's in partnership with a lot of great people. But James Rosebush is going to be in partnership with us. He is. I met him down in Dana Point with the Opal Group. He was a part of the Reagan administration. So we're going to be bringing in some amazing investors. We're going to be providing incredible value to the investors as well as to the startups that will be coming in. And so if you want to work with a guy who worked with the great communicator and get connected with some great investors, take a look at siliconvalleyventure.com under Golden Valley Angels and apply, and we'll take a look at your startup.
And of course, stay tuned here at Silicon Valley Impact in order to get all of the current news and stay up to date on what's happening, not only in your community, but the entire startup community.
Yeah, for sure.
Yeah.
All right. With that being said,
all right, good job.
The meat and potatoes of the show is having my friends sit in on this and have great conversations. And I got three buddies here today. We had the ladies last week, which was a great show. So check out that show. It was with AJ Thomas, Isabel from TechCrunch was on.
Very cool.
Yeah, it was great. And then we had Michelle, the decision engineer. So check that out.
Which is a real thing.
Yeah, it's a real thing. So in the house, Hans, Max, Cash. Good to see you. Max, we'll start with you. Great to have you here, man. I've been trying to get you in this place for a while.
Thank you to Brian and Brian for having me on. I'm really excited to be here. Yes, I've been dodging this invitation for several months, and now I'm here, but I'm very happy.
We lassoed him. We trapped him. We got him. So give a little introduction about what you do to our audience so that they can be brought up to speed.
So 20 years in tech. Now I run a VC firm based in San Mateo, California. When I'm not doing that, I also sit on the board of trustees at the University of San Francisco and assist in managing their endowment. I sit on the private capital subcommittee. And then more recently, I'm now the chair of USF's incubator. So we're looking for startups to help change the hearts and minds of entrepreneurs of tomorrow. So hopefully we can collaborate.
Yeah, let's do it. I love that. That's new, right?
It's new. It just got launched. We've been working on it for about a year and a half. Raised some money. We got some cool people on the board. We have Trey Roldan, who you haven't met. He's a good friend of mine from college. We have the founder of Pete's Wicked Ale. I don't know if you remember that from the 90s, but he's on the board. He's a former chocolatier as well, but a good friend, Pete Schlossberg. And then Amy Huang, who's a a VC who I've been working with for the last year. So we're really excited. And then Ron Rose. So like a lot of great people, plus the backing of the university. So we're really excited about that. They gave us some space. We've raised some money. And so we're going to get running.
I love it. I love it. So we'll talk a little bit more about that and love to learn some more. But Hans, you are actually our co-host today.
Hey.
Yeah. Yeah. You're working on that jacket. There's that sound effects. All right.
Everybody's happy.
Too funny. So Hans Sandhu, Bay Area guy, as I like to say, born in the convergence of capital and technical markets, and kind of shaped the way that I think about business and technology. Very thankful to be brought together by guys like you. And we were talking kind of before, right? Like, what is the one thing that we enjoy? I think it's the fact of the matter that it brings together individials like us who have never had the opportunity to work or anything like that, right?
But for. Yeah.
And he's telling me I'm the co-host now too, right? You're going to get that next. So what I do, day job, I've been in, technology, line of business, strategy, early stage venture-backed companies for, over 87 dog years, as I like to call it. I've had the opportunity to angel invest. Also recently, over the past year, became an LP of a top performing fund.
Oh, cool.
And then my day job is I'm CBO of a company called TheAgentic, which is a reasoning model. And we also have some open source products that we came out with pretty recently. So if there's one thing I would say, right, one thing at all, it would be the timing in which to create technology in companies right now is cost nothing.
Sure.
So if you
cheaper
have
than it was.
Oh, yeah. I could talk about this all day, but some of the use cases I'm seeing, if you have a hypothesis or a thesis out there, go test it. Yeah. You have timing to go test it right now. So, that would be my message to the world.
Nice. Yeah, and we'll talk about how you do that, because people hear it, but what are the steps and how to execute that? And we'll talk about that. And you also like geeking out with me on go-to-market strategy, so we'll dive into that. Cash, getting off the plane to be on the show.
Yeah, buddy.
Last time I saw you, you were on the golf course, man. Good to see you.
Yeah, that was another plane ride. So good to see you too.
Talk a little bit about Pandu and your love for this startup game, because I know you've been grinding.
So I started out 25 years ago on Wall Street, kind of at the beginning of electronic trading, and found myself in tech. Eventually, electronic trading is effectively tech for finance back then, right? Sure. That was the beginning of it. And went on to do 5 different startup/growth companies, everything from AI to crypto to, middle infrastructure technology for investment management. And most recently found a BHAG that I figured I had the right background to go tackle with PandoAlts, and we're doing AI / kind of network LinkedIn for private markets, essentially, but more from the lens of operational efficiency and taking the paper-heavy broker-sponsored world and giving a true operational platform for the wealth manager. So we can talk a little bit more about it.
So for our audience, you called it BHAG. What is that?
The big, hairy, audacious goal.
Okay. I should have known. Okay, that went right over my head. All right.
Of taking, what was and trying to put it into what should be.
All right. Yeah, I hear all these tech terms in Silicon Valley. I was like, ooh, did I learn a new one? But good one. All right. So we'll learn more about what you're working on and obviously how you're moving that forward, because there's a lot of startups that are listening right now looking for insight on how to move the needle and not get stuck. And with so many startups strapped for cash, I'm sure that you have some insights, being that this is not your first rodeo. So we'll dive into that. But let's start with Max. Let's start with you.
What's up?
Yeah, let's start with what got you into this. Like, what is it about this game that made you go from tech to VC and venture? And make sure you drop your fund.
Sure, we'll do that later. But thank you. Kind of a long story. Right out of high school, my parents wanted me to get into real estate. I didn't do it. I was so adverse to it. My entire family was in real estate. It was feast or famine, though. So I got into finance and realized it's just as terrible. But I got recruited to work for a firm called Franklin-Templeton. It's in San Mateo. And I started helping clients manage their portfolios. Long story, a gentleman that was a benefactor of the University of San Francisco saw something in me. And one day he said, hey, I'm going to bring in $2 million on Monday. Help me open this account. I was 19. And so I did. And that would basically change my life. I would end up managing that money and then turning that money into about $4 million in about a year. At the time of redemption, I asked him, hey, would you back me to go to college? He says, sure. And he basically sponsored me to go to USF, and I ended up going to USF, finishing. During the course of it, he also said, hey, why don't you manage the university's private endowment? So I did that at 20. Wow. It was roughly about 32 million. But for a kid, it's a lot of money. Yeah. For us, a lot of money.
That's cool.
So he passes away. I end up going back to real estate. So kind of following my parents' footsteps. And I got recruited to join a firm called Redfin, redfin.com. I was the 21st employee. And then the company went IPO in 2017. And then I started one company called UpNest in 2013. That company we sold to Realtor.com, News Corp, in 2022. And then another company that I was recruited to ended up becoming on like the C team. We purchased the company through a management buyout, then sold it to OjO Labs in 2020. So I've had like 3 exits in like this short period of time. During that time, my wife gets sick, and I was like, man, I probably should spend more time with my family. I did, and it led me down this path to start helping other people. So I started to realize that there are so many other like startups and founders that needed access to resources and help. And in 2020, we started 25 Ventures. So 25 Ventures came out of this idea that, someone helped me, I'm going to help somebody else. And, it's been great. We've had a good run. We started the 25V Diversity Fund, mostly backed by me. We have a few LPs that are in the fund. We have 6 investments. We're still deploying capital. But in addition to that, as I mentioned earlier, I also serve the University of San Francisco's endowment officially now. Not like how it was before, but it's definitely full circle. So to answer your question, the reason why I came back is because I wanted to give back.
I love it. I mean, so much there in terms of your story.
It's a crazy story.
No, that's a
People always say like, oh, it's a crazy story. It's a crazy story.
But you had to learn in the beginning on the fly. What was it when you didn't know gave you stability to do well?
So in the beginning, I remember some of those early investments that I made back in 99. Most of them were just guesses. And by and large, I didn't really have it wasn't how we are today where we have so much access to information. So I ended up talking to a number of the portfolio advisors that were at Franklin-Templeton and picking their brain at lunch. Mm-hmm. It'd just be, hey, I'm downstairs, I meet with clients, could you give me some insight into the portfolio? Maybe you could help me make better decisions and help you communicate what we're selling. Mm-hmm. And they said, sure. So I did that pretty much every week. And that kind of got me prepped. And then there was a couple of other mentors that I had during that period. I had my aunt who was in real estate at the time, but she was dating this guy. He used to be an investment banker at Stanford, or went to Stanford. And he'd always tell me, be a contrarian, look for value. So that was always been ingrained in me, to try to find kind of the needle in the haystack and to dig deep. Don't just look at the research from what it is. You have to think like a customer. Like, why would a customer use this? Think like their customer.
So I heard three things. Find value.
Yes.
Empathize with that value.
Sure.
And stress test everything. Be a contrarian. In other words, look at things from multiple perspectives, even though you may love the idea.
Absolutely. That's sometimes the bias. You fall in love with the idea, but the ultimate thing is like someone else going to pay for that service. And if you think that way, then you can get to a lot of different answers very quickly.
Mm-hmm. And so what's kind of the vision? I mean, we got a little bit of the past, a little bit of the present. Where do you see 25 Ventures 10 years down the road?
Yeah, when we originally started this, I said, some of the investments that we would have made in the 25 V Diversity Fund would move into the Empowerment Fund, which would be kind of the larger $25 million fund. So I think 10 years, if the timelines are right, would be for us to launch our second fund, and then preparation for our third fund. But I don't know. It depends. I think we've had a good run. The fund's doing well, but we'll see. We'll see what happens.
I love it. And you guys are free to, chime in, ask questions. But Hans, I want to kind of pivot to you and start integrating these insights together for our audience ultimately to see the startup world, from a different perspective. You and I geek out on go-to-market, but you have such a diverse experience, much like Max. What got you into this, and then ultimately your experience in driving companies forward, and then the perspective of an investor? I'm just going to let you plop in.
Yeah. So I'll start off with what got me into this. Max, yourself, I had a really awesome somebody who gave me an opportunity. More or less, I chipped away at having the opportunity to get an opportunity to an extent.
Nice.
So I had a professor. His name was Ron Kovis. God bless his soul. He passed away a couple of years ago. But he was on 13 or 14 boards when I met him. He was one of my professors at Menlo.
Wow.
He was part of Stanford Business School, all this stuff.
That's cool.
And the one thing he ingrained in my mind, and it's still true today, you guys were just talking about it, is business 101, what somebody's willing to pay for something, right? Sure. That's what it's worth. That's the value. Yeah. Mm-hmm. So thinking about it from that standpoint kind of really changed my mind in terms of how you can articulate value, what it's worth to somebody at what particular point in time. That changes, right? And having the experience that I've had in tech on the line of business side of things, it's a different experience, right? When you see it for yourself, especially in the enterprise sales community, if you're in tech or anything like that, these are easy questions that we're asking each other, but heck, these types of things can take 9-12 months to actually answer, which is true, right?
Yeah.
True. Yeah.
So I want, before we get too far from it, you just said something, articulating value. Double click on that. Tell me what that means, because a lot of people will come in with a great idea, and it'll be feature. Here's the great idea. I love it, right? It's kind of like this has got to be a winner. But from your perspective,
it's got to be easy, translatable business value, right? And what I mean by that is actually monetary, right? Can you make it an easy enough equation that somebody who's an executive, right, can understand? Sure. Its translatable value associated to X, Y, Z, and you need to articulate very quickly who you are talking to and how they articulate that value. I think that's critical when you're thinking about startups, when you're thinking about any business conversation in general, right? But yeah, back to your question in terms of how I think about things, what I look at in particular. Granted, I'm a line of business go-to-market guy, right? What do I care about? I care about revenue. I care about forecast accuracy. One of the reasons I even got into the angel space and consulting and advisory space was 500 startups I would either get headhunted to go work at or have the opportunity to go invest into as an angel. I would maybe want to work for one of them full time. That's an issue, right? And a lot of the issues stem from articulation of business value, thinking about that early. How do you translate that, right? So when you actually get your Series A or your Series B, and you have the opportunity to hire, guys like us who understand that the founder is in a good place to do so. So I made it a period of over a year and a half of my life just to literally give back, and thought, if I can leave the world in a better place, right, from an articulation of business value standpoint, especially for technical founders, then heck, when they have the opportunity to meet someone like myself, they put themselves in a good position to actually hire that person, right? So,
and then talk a little bit about from the perspective of how you're integrating that into what you're doing now. What does that look like?
Yeah, so I have, first of all, I love what I do. I get to work with like high tech, deep tech kind of stuff, which has been my bread and butter forte for about a decade. But what I would say is the most amazing thing is, again, kind of my mission, right? What I initially led with is it costs nothing and it takes nothing to build tech right now. That is absolutely changed, right? So I don't want to make this a whole sales spiel or anything like that.
That's your rabbit hole.
I will say, I'm placing bets on early stage startups, early stage founders who are operators within industry, who work at a good company, right? Or either a director, VP, or even higher than that level. They have a thesis or a hypothesis associated to particular business value, and they want to go test it. They're trying to figure out how to go do that, right? I've got to wait for them to do it.
Nice.
Cool.
And so, Cash, again, I want to fold you in on this. So Pandu, you identified a problem in the market. Let's start there. What is it that you identified that was missing based on your experience? And then what we just heard from Max and Hans, how did you identify that value? So experience, pain point, value. You're the startup. Tell us how you identified all that.
All right, I'll bring it way back to 25 years ago. My first job on Wall Street, I was a clerk in a risk management desk for a trading company. And what that meant was that me and the other clerks there were taking the daily trade blotters and typing all the data into a spreadsheet for risk management reports to senior management. That's the worst job in the world. So literally, I was like, I got a college degree for this? Well, what am I doing here?
Right.
So I went back to the team and I said, hey, I got to do something else, or give me something else to bite into here. Like, I can't spend, all my days doing this and only this. And so I got all my securities licenses. They said, go at it, take as many tests as you want, have fun, knock yourself out. But in doing that, I learned that these trading companies, they have to hold all of those transaction details in a database somewhere.
Sure.
So I started digging into the IT team. I said, hey, where's the database? It's like, it's an Oracle database. So I went back to the same group and I said, I want to go take night classes and start taking some SQL. Like, all right, fine, knock yourself out. So I learned some SQL. I started to build a program. And then all of a sudden, I had automated what we were typing in all day long.
Love that.
And so I came back to him and they were like, that's great. You're now the head of the desk. And he let go of everybody else because they didn't need it.
Guys.
Yeah, sorry. But I mean, hopefully that gave new opportunity for those people to not be doing this inane, horrible job.
Sure.
So fast forward 25 years, and in the private market space, it's the exact same thing.
Yeah.
Like publicly traded companies, banks, private wealth groups, they're literally going through even harder, sometimes hundreds of pages of documents, trying to find this data and then inputting it into some manual back-end process, loading up an Excel sheet with the right formatting to suck it into a back-end system. I was like, okay, so in 2016, I got into AI with a Silicon Valley company called Orbital Insight, doing computer vision at scale on optical satellites. And, we were processing a petabyte of data a day. And we were doing some pretty complex object detection, et cetera. And LLMs were somewhat infancy, but certainly was monitoring the advancement of that. And I said, well, we can fix this. It's not hard for us to program an LLM to extract data from a document.
Sure.
And so that was the genesis of this, where now I go into a bank, a private wealth group. They've got tons of employees that are very well educated, typing data into spreadsheets.
Sure.
And it's like, let's repurpose those people. So it's really easy to show business value in that context, you're saying. And for me, because of my fintech background also and being at middle office technology places, I knew that I could put together a team that wasn't just throwing LLMs at a problem, actually specifically knew the use case and how to translate that into value for the end customer. So we mapped that first, like what's the problem that we're solving? How do we implement better technology right now? And it kind of gets into my whole thing about why I do startups in general, is because the incumbents are not really able to move their boats as quickly
of course.
as the startup that comes in. And the financing that you start to get later on in your evolution as a company is really PE and or private companies that are publicly traded. And so as a result, they can't be as nimble or potentially even have a concept of cannibalizing existing cash flow because that's what the PE company's dependent on. So they can't make those changes. And so I said, let's just wipe the slate clean. Let's get the right team, but then let's use all the new tech. And so we're going to solve a really big problem. That's my big, hairy, audacious goal, which ultimately creates a data company that could be the most valuable data company in the history of Wall Street, if we're right.
So with all your experience, and then those out there struggling with the same pain that you've kind of solved, for a lot of startups, you may or may not be experiencing this, but they see that this is based on their experience, they see that this is a great solve. This will solve their pain. However, once you take it to the market, when it's obvious to you, how are you educating the market to adopt this obvious problem? Because that seems to be a big tripping point for a lot of startups.
Yeah, it's a good question. So fortunately, it's the double-edged sword of being a middle-aged founder. So I can't just sell everything I have and live in a van with a Starlink. But at the same time, I have a lot of relationships. So I've been able to essentially go to places that are solving these problems today and say that I have a different way to do it. And what's happening in the market right now is still offshoring. So let's take the existing problem and we'll arb human capital to solve this problem. And that's a fix, but it's not a scalable fix.
Right. Short term. Sure.
If you, and I talk to these guys, like if you believe that this technology is starting to come, then why not get ahead of it and really implement a true technology solution as opposed to one where as the problem scales, the cost scales.
Yeah. Okay. So I want to pivot it to Max. I'm listening to what Cash is doing. Great product, obviously a big need, very niche market. I want to talk now from a wider perspective of startups that you look at in terms of timing. We had Bill Reichert in here in the 90s. He was part of the first touchscreen.
Sure.
But he talked about how the timing wasn't right and it was delayed. When you look at companies that are fundable, that got a great idea, how do you look at and I guess assess timing or other hurdles they may overcome that may be and so that company is now an interest to you?
So we look at it from two different levels. We look at it from a revenue traction level, and then we look at it from the overall consumer behavior level. We want to see what's happening around the overall industry. So if there's already been some movement, we've seen either PR or acquisitions or partnerships or integrations, we'll take that into consideration. And then the other part is this more of the data, okay, who's using it? How many people are using it? What's the frequency? How many clients? How long have they been in market? And then we take a look at those and see whether or not the timing is good. We've seen companies that will say, okay, it's a little bit ahead of its time, but maybe if you work on this part of the business, the market will eventually catch up. The challenge is that's all guesswork. It ends up becoming a place where it's kind of an exercise in a group, and we're just saying, okay, we don't think it's time. But I think the challenge is when a startup or a founder says it's time now, it's the timing is now, and they actually feel it from their true wherewithal, that sometimes we'll say, okay, we'll believe you. Because in a way, we're not the experts, right? We're experts at maybe more generalists. We tend to look at startups as specialists. So if they have this high conviction, sometimes we might lean in and say, okay, maybe you're right. Yeah. Because, at times, we're not always the ones, we're not the ones driving the boat. We're the ones that are providing the fuel. So when that's the case, sometimes we like to look to the captain and see what the insight is there.
I love that. I mean, this idea and importance around passion.
Sure.
I mean, a great idea, timing. Now, does the founder...
We could be wrong. There's always... Absolutely. Most of the times we're wrong, by the way. So, but I think some of us have to believe it in order for everybody else to get all the oars in the same direction, to use another analogy on a boat. But I think that by and large is one of the things. If you ask me, is it the right timing? And as a VC, I'll say, no. It's not the right time.
No.
Along those lines, though, so right now, post zero interest rate environment,
sure.
The capital that's on the institutional side that's going into these early phase companies, great founders or industry players with vision,
sure.
And an assembling of a great team. In my experience, there hasn't been a lot of capital out there for those types of things. They want the proof point of, okay, we want to see the revenue, we want to see the growth, we want to see the metrics. But at that point also, you're ready for a big institutional round. So there's almost a gap right now, which maybe you're filling, Brian. So, which is kind of interesting.
I like that.
My whole bet on that is, and this is why I don't directly sell in the enterprise with our business. We've got some use cases associated to it and people that want to talk to us, that's fine. But we're not directly going there. And my whole bet is associated to what you guys are both mentioning. And more or less is, I truly believe if you provide that specific business value in that use case, in that industry, in that vertical, whatever it may be, you have a higher probability of not only becoming a vendor associated to that business, but if it actually adds that much value, you might be procured and actually turn into an M&A conversation. So that's my whole play right now. again, the way that, from a technology perspective, the way that these companies have been built, if you're thinking about a building, right? They don't have the architecture or the piping, the plumbing to essentially deal with these types of data, right? So you've got, CEOs, you've got, guys that are executives. It's a common thread that are saying, oh, where's my AI? Where's my AI? Where's my AI, right? It's the same thing that's been going on for 10 years.
You're absolutely right.
Right? And now to that, their IT is saying, I can't support this. We can't do this, right? So they're taking on POCs, aka science projects.
Right.
So back to the startup thing, tons of founders, technical guys, they say, oh, amazing, I've got this POC, I'm doing all this. Great, it doesn't mean anything. Find out again what's the real translatable business value.
Sure.
So
how do you you obviously have the conviction and the insight of that, and it seems obvious to you, and I'm buying in as I listen to you. But however, when you're sitting at a table, whether it's this topic or another topic, how do you communicate this as an obvious choice? I mean, maybe we bring Michelle back, Brian, from a decision point.
Decision architecture for this?
Maybe there's something that goes into to educating the market, communicating it in order to people make that leap of faith.
Are you talking about from a sales business perspective, or are you talking about an investor perspective?
Well, when I was listening, I was thinking there's great overlap there.
Yeah, there is.
Right? If you just take the framework. I mean, the content is different. The context, I think, is a lot similar. Right. So I'm an investor versus I'm a startup.
Sure.
I think the frameworks are there. What would you say would be a great framework to make the obvious a lot more clear to those who need to engage?
I think you have to take a couple steps back. You got to, again, business 101, you have to understand who you're talking to, right? And you have to do your homework in the sense that, when we grew up doing this kind of stuff, it was a lot of manual work. Now there's no excuse. There's no excuse not to do your homework, right?
That's true.
I used to say, if you're in sales or business or any of that kind of stuff, you're in the research game. You're in the data entry game.
That's
and you have the opportunity to go position that against someone. Amazing, right? So come with a thesis. So I said this last time I was on this show, but more or less, I truly believe you have to have a thesis and what does that really mean, right? You got to understand who you're talking to and what they care about. Of course. Nice. Or come have an understanding or an idea around it. It doesn't have to be exact.
Well, Han said that he had researched me prior to this. I was like, oh, makes me feel better.
There's so much.
I was like, okay.
Well, hey, man, I ain't gonna go meet somebody what's up, dude?
It's funny because I did the both to you guys too, though.
I love it. All right. Go ahead. So when we come back, we're going to talk a little bit more about the overwhelm of data, the overwhelm of information. How do we sort through that in order to make a decision and educate the market and make sure that it's landing on that problem? So Brian, take us out. That was perfect. All right, we're back with Cash, Hans, and Max. We're diving into the crossover of startup and investing. We left off with a conversation of all this information out there that needs to be researched. We have access to more data than ever. And so when it comes to investing or startup research or your market or even getting to know people before you meet them, how do we sort through that? How do we say, okay, this is good information. This is a good person to listen to. They're insightful. What does it come down to in terms of doing research in order to be, an effective leader in investing in startup or even subject matter expert? I'll just plop that out there, and you guys can just go and I'll watch and drink my water.
What do you use?
I was gonna say I think it's a science and more of an art form now than science, and that's because there's so much data. I would say, for me at least, the one thing that's crazy is that tech is cannibalizing itself consistently, right? I think I wake up every single day, and especially in our spaces, I see this business is gone, this one's gone, right? Yeah, sure. This release, which is open source, has now cannibalized a company that had significant funding, right? So I think that you need to remain cognizant of it, but you got to have, at least for me and my standpoint, I've got some really good people around me on the tech side that feed me that information. From an investor's perspective, heck, man, again, I lean on the people that I know, right? I think that there's a difference between saying I'll give you an example. A lot of people are on LinkedIn talking about stuff constantly. All the best investors that I know are not on LinkedIn. There are a couple of them for sure. They're at the end of their careers, I would say, and they're giving back to people. But I think you need to get out there and try to find other people, or again, people that align to your thesis or whatever it may be. That's not necessarily a good answer, but it's the reality of which.
Yeah, you got to really hunt for it. And so let me leap to this then in terms of decision making. Max, when you're going through due diligence, what are some things that you look at from the point of second conversation on until you're handing over a check that tells you, okay, this is a good decision?
So a few things. I think the art of communication is important. I think, being honest with your time. So, hey, I'm going to call you back at this specific time, or hey, I'm going to give this to you at this specific time, or I'm going to send this email on your behalf at this particular date. All those things I pay attention to. But in addition to that, I also do a lot of reference checks of people who have potentially worked with them. So that's another part. The other part is I always test that product. Most of the time, if I have a chance, I will test it and use it and see whether or not it says it's doing what they say it's supposed to do. That's one of my things. I like to talk to customers. So I want to talk to a customer. I want to see a contract with that particular contracts with their vendors before I write a check. I also visit their office. And then one of the other things too, and this is a weird one, I always have to eat with them. I always say that you don't know a person until you eat with them. And the reason why I say this is because you'll see how they interact with not only like the service staff and their manners, how quickly they eat, what they talk about. All of those things are a part of my decision-making process.
Oh, they matter.
Is quick eating a bad thing?
Yeah, it depends. It depends on Taco Bell. Exactly.
Well, he's going to take us out to lunch
Taco Bell.
Yeah, what is the quick eating thing?
I mean, I think quick eating, to me, it depends. If like we're in a big rush, we have a meeting to go to, we have to rush, sure. But what I don't like is like a 3-hour martini lunch. We're out there for God knows, okay, we need to go back to the office and whining and dining. I like to be very intentional. It's more about how they interact. I like to know that people tend to give off a certain level when they're like asking for something, but then when things go awry, when things are bad, or the startup's not doing well, sometimes I can lean in on how they would react during those periods of times, because that's what I'm learning. That's what I'm more watching.
You're looking for tells in little ways, unexpected ways. I get it. Yeah.
So you got to share a horror story then. We probably all have one. Yeah. In business context, for sure. I got one. I know you do.
Go. You can go.
No. You got it. You got it.
Eaters?
You can talk about it in an eating context or something like that.
We had written a check, 6 digits, and then I tried the product. Initially, we flew out to see them. They were in a different state. We spent 2 or 3 days with them. We wrote the check. And then about a year later, I went back to test the product using like somebody else who needed that service, and they couldn't get it filled. So during their second round, their Series A or Series B, I didn't write a check. Emotional. So there's something to this. I had tested it before. I tested it again, and then they couldn't fill the order. I gave them time. They couldn't give me a good reasoning behind it. Yeah, so I didn't write them a second check.
It sounds like there's a lot of not only observation, thought process, what does this feel like, but it all comes together with there's this instinct.
There is. I used to tell myself that I'm not like that, but then more and more so I'm feeling that I have a little bit of that. I try to be, very objective and try to remove my biases. I mean, the name of my fund is the 25V Diversity Fund. So we're trying to like break into these barriers, but ultimately we all have our biases that we have to kind of work within, no matter what. The question is, are you able to recognize them and see whether that bias is for a positive, for a negative, and working within those parameters?
So, and adding to that, another thing I heard from the opening portion of the show is all of you have been positioned well. In other words, you've met people who gave you a chance. You've had good mentors around you. You've surrounded yourself with resources in terms of good people that have positioned you well and took a shot on you. And I don't think we like to easily dismiss it as luck, but I think there's a science to the subtle positioning.
Like
add value before you ask for things is usually my rule of thumb.
Nice. Nice.
Throughout my career, I'm always trying to see where I can find a way to help you before there's an ask.
And the opportunities always end up finding you.
Yeah,
exactly.
There's something about that people don't really get. They're like, oh, you're so lucky. It's not luck.
Nope.
You make your own opportunity.
I love it. So you go back to the big audacious goal, right?
Okay, so
big, hairy, audacious goal.
I'll tell you, when we talk about data, data is really interesting because yes, there is a lot of data out there, but in the private market space, so venture, private equity, real estate, the collectibles, the list goes on, even to some extent crypto, but less. It's really fragmented. It's not readily available data. So what we're trying to do is build more of a LinkedIn concept where everybody is incentivized to populate data and have clean data. So what would be nice if you were starting a early phase company in a particular sector or industry is if you put out exactly who you are, then the IOI, the indication of interest you put out for people that potentially could provide capital, was inbound to those people that actually wanted what you're selling. And vice versa. So if I want to go find $100 million worth of Anduril stock right now, I would rather put that out and only get returns from people that are selling Anduril stock, not from everybody that has, late stage private company flow. And then say, well, I don't have that, but I have this, right? So, what do we do to find these kind of matches right now? We go to conferences. You and I met at a conference. We spend a lot of time, we spend a lot of money, but let's go back to the more important one, time, because that's really the one commodity that you don't have as a startup. You need to be moving fast. You need to be iterating on your business. You need to be finding those customers that truly value, the solution set that you're bringing them. But if you're wasting too much time trying to raise capital from people that really aren't interested in what you're offering,
right, of course,
then that's an impediment to everybody doing business in an efficient way. And we don't have that in public markets. I mean, we can pull up whatever we want on Google, but we did back in the day. There was brokers that had their book of business. They would try to keep you captive there. There was lots of incentives to stay with them. And then once you started diversifying out of a particular counterparty relationship, we get better price discovery, more executions happening, which I think is going to create more efficiency across the board, but hopefully give everybody some time back. And, even as simple as not typing into a spreadsheet.
Yeah.
The world's going to outcome-based, not only pricing, but outcome-based, situations, which is essentially what we're leading towards, I believe.
I think it's all about the data, so if we can build good tooling around data to essentially license that to any new provider that's going to pop up. I'm seeing it every day as I'm working with AI in our business. To your point, you can start up something really quickly and get a proof of concept out there, and AI can start writing Python notebooks for you on a concept that you come up with. And the incumbent SaaS products out there, I think, should be scared and need to be thinking about reworking their businesses in the future state, which is really going to be data driven.
Yep.
So is SaaS dying?
It's evolving.
I think it's going to die if they don't evolve. I think to your point. I actually haven't released it, but I have an article that I literally wrote on this, and I think the challenge is like many incumbents are like really stuck with their cash flow, like they don't know what to do. It's hard to maneuver, hard to be agile. And then they're also scared. They're also scared to do anything that will affect it. So it'll be interesting over the next few years. I think the data, the AI, aggregating all of the searches, it's going to be very interesting over the next few years.
Yeah, I had the opportunity to give a keynote on this not that long ago. I truly believe software as service is changing to service as software. Everything is going to be driven via outcome, right? I even think about it in the terms of what we see on the selling side of software right now. Buyer-seller asymmetry is completely flipped, right? You're only going to somebody who actually works on the sales side of something. I joke about it, but if you want somebody to do your homework the old-fashioned way, you want a testing environment or you want some commercials, there's no other reason for you to go talk to somebody in sales now, right? So I think that as, agents are used or more autonomy is associated to workflows, I think that everything is going to be driven towards what the outcome is, right? You're not going to have annualized subscription models where the value you get is, again, is it pertinent to, the actual contract that you're paying? Who knows, right? And now with outcome-based pricing, tokenization of certain things, now you can have that direct outcome correlated to whatever business action or use case or whatever you're doing, right? And I think that that's better for everyone.
I mean, there is something there. We saw it in the prop tech space, like with Zillow and Realtor.com and CoStar and Homes. They were absolutely like focused on a SaaS, like CPL sometimes, but for the most part, we've seen a shift where they're more success based.
Yeah.
So I think that's
look, deals aren't even getting done.
Yeah.
Right. You can't drink each other's champagne or drink your own champagne with the fund for so long. Right. You can't change banks so much. In my view, though.
And the other part is
how do you measure success?
Oh. Everyone has a different definition. Yeah, exactly. Everyone has a different definition.
No, but I think that, again, I think that that's a good commercial exercise, right? So I think that there are some companies out there that in terms of, hey, how do I actually measure, usage-based or SaaS-based pricing, right? How do I make it actually, outcome-driven? That's an intriguing conversation. I tell people in the early stage things, all the time, like, okay, drive back down to, again, what's somebody willing to pay for that? Lead with that, and then find a way to base it off of usage or base it out of like outcome, right? But I think even just starting with that is a good way. But I don't think there's one magic bullet, just kind of right now. But there are new solutions coming out.
It depends on the industry too.
Sure. Yeah, exactly.
For sure.
So let me back up to contrast this. We're talking about where this is going, where we're at, where this is going. You mentioned earlier, Hans, that now is the time also that it's an easy path to entry. Talk a little, in what we just discussed, talk a little bit about those who need to play catch up, and now's the time to get into it.
Cash said it a second ago. I couldn't agree more. You have big commercial organizations, incumbents that control industries. They should be shaking their boots right now. I truly believe that tech, AI, that it can be owned by the early stage startups only because these big ships, they take a while to deviate and change off their courses, right? The other thing that I think to this as well, so when you're an early stage company, right, if you have a thesis or something like that, you can go utilize no low code tools. You can utilize GPT if you want to. Is it private? That's a whole other conversation we should have.
Sure.
But to that, go try to test and go try to create something, right? Do the basics, like have a SWOT, have a thesis. Okay, try to figure out if you're in industry, talk to your colleagues, see, okay, would this actually be something that's worthwhile? And back to the trend that I'm seeing, there's tons of operators out there that see the writing on the wall. They're individuals who have worked in industry for 20 years, and they have understanding of how that space works, the interactions, and the translatable business value. And they're thinking to themselves, okay, do I want to stay on this? Or
of course,
do I have the opportunity to take one last shot at it,
sure,
right? Or entrepreneurship or something like that? Because that also comes down to, like, in my mind, a wealth conversation too, which I think people with media in general,
I do think that
see.
Not every individual has the entrepreneurial spirit.
Not at all.
So, I remember writing something about this, that, a great founder can come from anywhere, but not all great founders are like alike or something, or I forgot exactly what I said, but I remember thinking it's true. Sometimes some people are comfortable working in kind of like the 9-to-5. That's fine. That's perfectly fine.
That's totally fine.
But we're trying to encourage that spirit.
Yeah.
Right. The whole thing is like trying to inspire others to go try it. And it's a wealth conversation. It's an independence conversation. But I think sometimes it might be ingrained. Like it sounds like from all three of our stories, like it was kind of ingrained. Like we were born with this, and we've continued, and that's why there's been some success. But I think, inspiring the next generation of entrepreneurs, that's what I'm interested in too. And it sounds like it is for you guys too.
Yeah.
Yeah, I mean, there's a lot of quiet quitting out there. You have to be a different breed of cat, I guess, to say, you know what, I'm going to go tackle something because I think that it's going to be impactful.
Takes conviction. Yeah.
I was always told growing up that you work for people because you're learning, or they're paying you a lot.
Like that. Yeah, that's good.
Exactly.
That's a good one.
Well, what I'm hearing is I mean, as a founder, or excuse me, before you even become a founder, you make a transition into as an entrepreneur. You're brought up in structure. So you take a role, it has structure in place, but then to make that leap, there's no structure. You are now creating, and that's exhausting. There's no guardrails, there's no parachute. And to pivot intellectually from, okay, I need to write an effective email, to fundraising, to bringing someone on the team and guiding them, and then letting go rather than you taking control, I think is a unique mindset of an entrepreneur who can make the leap from a very structured environment. And you came from a very structured environment in finance. You all have come from that. And so making that leap, and now you're responsible for creating, I think is a big, big challenge for a lot of founders. And so not everybody has that.
I do think having strong mentorship, like a mentor chain, is important.
Yeah.
Despite what anyone thinks, no one does this alone. It's absolutely not something you do by yourself. You absolutely have help. There have been people that have been guiding you. They might not necessarily be the name on the wall, but they were there helping you kind of through this. I think that part's important. I think also as an entrepreneur, you have to look for it. You have to find people that are like-minded and who potentially are doing something and not be afraid of asking for help. The nice thing about kind of the digital age and everything being online is that you can find somebody. You can find somebody on X. You can find somebody on LinkedIn. There's some avenue. I can reach out to Brian and ask for an introduction. And maybe I didn't know that you were connected to that person, but for your LinkedIn post where I saw they liked your post, you wouldn't have had that 25 years ago. And to Han's point, yes, it's easy to build businesses and start companies, but there's something there with that entrepreneurial spirit to make it sustainable.
Yeah. Let's talk particularly if you're not too greedy on equity. So
that's a good point. That's a good point too.
An organization is a group of people rowing the boat in the same direction, right? They have the same conviction. They only join a startup because they actually believe in what they may do. Yeah. And encouraging advisors to help row. I've been freely giving out, equity to people I think can help the business.
You have to.
Because ultimately,
you have to.
To me, it's all a 1 or 0.
Exactly.
We either make it or we don't.
Right. Yeah.
So what's the equity worth if it's 100% of 0, right?
So we talked a little bit about mentorship, finding that person that trusts you, who gave you a shot, lets you run with an ideas, but yet then gives you insight to kind of guide it within the guardrails. Maybe building also a healthy team that can work together. Real quick, how do you assess a good business relationship when it comes to investing, starting a team, or even scaling a team?
So they actually follow through what they say they're going to do.
Yeah, follow through.
Like actually doing it. I personally, I've been having a little bit of a difficulty trying to get somebody to be like my right-hand individual almost. I've been talking to MBA students, a lot of people, but it's kind of at least for me, the old-fashioned stuff. You have to have a little bit of that. And I think that actually separates you, especially if you're a new entrant into the market right now.
Old-fashioned, what do you mean?
I think turning the lights on, turning it off. I think that, again, there's a compounding effect to hard work.
Like at the office?
Well, just at the office or that's the old mentality, right? But you can do that in other fashions, right? Mm-hmm. But again, coming prepared, right? That opportunity only meets you because of what you put into it.
Well, to use another analogy, if the floors are dirty, pick up a broom.
Exactly.
That's right. In these startups, everybody's got to wear multiple hats. It's part of the gig, There's no hiring method that's going to give you 100% fit in your organization. At least I haven't found it yet.
Yeah.
But when you see that there's a mistake, you got to correct those errors fast and course correct and do what you got to do to keep moving the business forward. Because ultimately there's a lot of people you're responsible for, not just that one.
Yeah, it goes back to what you were saying earlier, Max. I think is when you take someone out of the business environment or even school, they can do great in a structured environment, but you take them out to dinner, you see those little nuances that says.
Or they drive me around in their car.
Yeah.
I'd love to see what their car looks like.
That's the old one. Yeah, you check out. They come, we have the interviews. You check. I used to do that.
I've got crayons running around.
That's okay. That's a defensible thing, Oh my God.
Yeah, we used to do that. This company I worked at for 5 years.
Yeah.
We used to always tag team like, okay, when this person's being interviewed, go find their car in the parking lot and see what it was like.
It's true.
interesting.
It's a thing.
It's true.
It's a thing.
Yeah.
And what are you looking for when they're looking at their car? I mean, is it just
Well, I was talking
because
about
I think a
love
lot of
cars,
people
right? I
mistake
love
that
whips,
with
but
they got to be driving something fancy and expensive.
No, not like that. It's
Yeah.
mostly like what's inside. Like like maybe like broken windows. Maybe might be a telltale sign. Maybe
that
like
fixed.
stickers or all that stuff. Sometimes
Right, you got to go clear all the
these things.
Burger King wrappers out of your.
A clean car. It doesn't have to be a nice car. Just a clean car. That's the. I mean, I don't know. It seems
Again-
crazy. I don't know.
Again, my front seat looks really nice. My back seat looks like chaos.
I have kids. It's okay. Yeah. I got stickers in my back seat.
defensible, though, right?
Know your audience.
Yeah, it's defensible. But that's great. I think, again, developing, I mean, if there's any theme for this show, is the capacity to develop a community of good people that can help move a cause that brings everybody a sense of fulfillment.
And even just having somebody to talk to, because it's a pretty lonely deal. You know, not everybody, not everybody understands what you're doing, particularly if it's your, friends from the old corporate world. They're not going to quite understand where you're at. So having those mentors and those, potential people helping you to row, even if it's just picking up the phone and having a call with another founder that's been there and done that or in it together at the same time, is immensely valuable.
Even now, I'm still looking for mentors. So I recently picked up one. He's a CVC at a large venture fund, but had been doing a different part of venture that I don't know anything about. So I have a standing call with him every month. And they run one of the largest insurance companies, and it gives me different perspective. One, the career, like just obviously their thought process and decision making, and then we talk about deal flow just for fun. Yeah.
I'm sorry. I want to ask Alex. I'm sorry, Max. Excuse me,
it's okay.
Max. I'm sorry. When you say you've just acquired this new mentor that you have a standing call with every day, just for the people listening, how did you establish that?
So really strange. There was a girl that I went to grade school with. She went to Harvard, and there was a couple of people in her class that I met. That person was doing some work with that insurance company and goes, "Hey, do you want to meet them?" I said, "Sure." And I never met this person in person. We just did a call, and then that call, we just hit it off. He was an older gentleman. And I said, "Hey, what about we do this every month?" So sure. And most of the time we're not talking business. We're just talking like just crazy stuff or crazy stories. But it gives me another place to talk about whatever crazy stuff's happening to me and to compare, like, oh, have you ever seen this? Because it just like the startup world, the VC world is super, super lonely too.
Yep.
It's just the same.
Yeah, a lot to process, and you need those people around you to just kind of run it through.
And you look crazy if you talk about it with your founders. So so it doesn't happen.
And if I was asking Brian, I wouldn't wait 3 years and then reach out to him and say, "Hey man, I need something really bad right now."
Exactly.
I know we only met 3 years ago.
Yeah.
But
you got to nurture them. You have to nurture the relationships.
It's like any relationship.
Yeah, absolutely.
Yeah. Well, I love it. Well, as we start to wind down here, I want to go around the room. I want to make sure our audience knows how to connect with all three of you, because again, I love bringing in great people, and so for our audience, I love to make that connection. Max, how can people connect with you? And then of course, a parting word, like some insight.
Yeah. So I'm really big on LinkedIn. Unfortunately, Hans was saying that most VCs don't talk on LinkedIn. I actually write a lot on LinkedIn. So I was thinking like, oh my God, is that me? But you can find me on LinkedIn. If you reach out to Brian, I'll drop my email address. I'm really open to connecting with people. I think my final comment to, one, thank you for having me on. But the other part is, if you're a founder, if you're an innovator and you're looking to do something amazing to change the way like we look at things, reach out to me. I'd love to talk to you.
How can I impact the world with this? Brian, quick on the buttons. I love it.
It's good.
Emotional. Damn, I'm still stuck on that one.
That's right.
All right, Hans, how can people connect with you?
Yeah, people can find me at on LinkedIn. Right, I don't post as much. I should probably listen to you and probably post more. But you can find me on LinkedIn. You can find our company at TheAgentic.ai. I will leave you guys with, if you guys are trying to build what I call fully autonomous digital workers, think of something almost like a Devon AI, but for a particular industry, come find us. We've got some ways for you to do it. We also have an open source bench, which already has pre-built agents on it, and it allows you to build custom agents, which attribute towards what we call digital workers. So check us out. Got some cool stuff coming. And maybe the model is going to be open source too.
And you'll be back next month. You're going to be here again on the show.
Right. Actually, we got to find out exactly what date, but I think so.
Yeah. And maybe we'll do a workshop on how to do
build
that.
a digital worker.
You guys want to get super techie. We've been actually doing them at VC Nest in Palo Alto in association with some other folks. But yeah, just architectural conversations, getting the real deep layers of tech, right?
Well, just another thing, VC Nest will be out at our event on March 12th. So actually when this airs, it'll be tomorrow. So they'll be out there. So if you want to come out to meet all of them, check out, go to Eventbrite, and you can look up our event at Foothill, actually. So,
love it. There we go.
Cool.
Cash Lafferty, cash at PandoAlts. So Pando is the largest and oldest living organism on the planet, a clonal colony of aspen trees in Fish Lake, Utah.
Nice.
So shared root system, they're clones, the concept of the network. But Cash Lafferty is my handle on LinkedIn. Feel free to reach out to me there. And I'm actually going to be in DC next week, speaking at a Milken Symposium on retirement plans. Cool. It's a free, open event. So register and come see me in DC.
I love it.
DC.
Well,
DC is a cool place.
Well, I want to thank you all for being here. You're amazing. I encourage everybody go to SiliconValleyVenture.com. It's our new website. We have our show on there, Silicon Valley Venture. We also have information about Golden Valley Angels and a great bio on Brian. Brian, you crushed it today on the on the buttons.
You're the man.
Website looks great, and everybody should go there, and you should all be telling your friends to be listening to this and liking it and following on Apple and Spotify.
Yeah.
And iHeart.
And iHeartRadio.
Yeah.
Or wherever you listen to podcasts. Just get the word out.
That's right.
All right, Brian, take us out. Thanks, guys. We'll see you all next week on Silicon Valley Impact. Stay safe, and we'll see you soon.